Hey grade 11s, we're going to work through task 9.8 on page 397 now. We're still doing the ledger accounts of a cost accounting manufacturing business, and hopefully you're getting a good feel for these ledgers. They do follow the same sort of pattern over and over. The adjustments and transactions are very similar. The textbook examples are maybe a little bit easy, so towards the end of this chapter we will send you out a worksheet from a different source just to test you maybe. Okay, so on page 397 it says Fox Manufacturers produces motor vehicle engines that they then sell to various retailers at a markup of 50%. Okay, when you read the markup of 50%, you should be thinking the finished goods ledger account. That's when that often pops up. Their financial year ends at the end of February each year, and we have got 8 ledger accounts to do. Of those 8, you'll see that 2 are maybe new to you: selling and distribution cost and administration cost. Now, those 2 are very similar to the factory overhead cost, but they look after different things. The selling and distribution cost adds up all the costs associated with selling and distributing stuff. And the administration cost account looks after the office expenses. Okay, so when we do the split transactions, this is where some of the information is going to go to those new accounts. Okay, the rest you should be familiar with. Right, so let's get going. The following opening balances appeared in the books on the 1st of March, so the start of the year. Right, let's climb in. So I'm going to highlight as we go, as we usually do. So there's the opening balance of raw material stock, which they gave us. There's the opening balance of WIP, which they gave us. Finished goods has an opening balance on the debit side. There it is. Consumable stores on hand for the factory of 7,000. Okay, let's think of that. We don't have a consumable stores on hand ledger account, but it's telling us that in the factory we have got 7,000 rands worth of consumable stores from last year that hadn't been used up yet. So just to show you where we're going to head, here in factory overheads, there's consumable stores. We're going to deal with that 7,000 a little bit later. Okay, so just park that thought for now. Okay, also it tells you the opening balances for equipment and accumulated depreciation on equipment are given there. So we're obviously going to work out depreciation just now. Number 1, raw materials amounting to 300,000 were bought on credit. Number 2, raw material amounting to 230 were bought for cash. Okay, so chilled transactions here. That means you're going to have an opening, not a debit entry there, creditors control from the CJ 300 and bank CPJ 230. You're buying for cash and on credit. The next adjustment, number 3, carriage on raw materials amounting to 75,000 was incurred on credit. So also, if you're paying for delivery of the raw materials to get to you, you add it to the cost of your raw materials. So there is your creditors control. Why? Because we bought this delivery, or we paid for this delivery on credit. CJ and 75,000. Okay, so for now, that's all that's going on our debit side, so we can actually total that debit side and put 695,000. Number 4, raw materials amounting to 12,000 were returned to creditors. Okay, so there on our credit side, we're going to have creditors control, the CAJ, and 12,000 rand. Obviously, they might have been broken or we didn't want it anymore, so 12,000 goes out on the credit side. Number 5, consumable stores bought for cash for the factory amounted to 22,000. So factory overhead cost, right? I've already highlighted my consumable stores word over there, but now how much? Here in this bracket, we had 7,000 opening balance. We bought another 22,000, but remember, at the end of the year, there might be some consumable stores we have not used yet. So it would be wrong to write 29,000 as my figure, because there might be some that I haven't used. In fact, if we go to the end of the question at the bottom of the page, it says that consumable stores on hand at the end of the year was 3,000. So we have not yet used 3,000. So let's deal with this. That means 7 plus 22 minus 3 means that we have used 26,000 rands worth of consumable stores. Okay, so that's sorted there. Factory overhead cost has gone up on the debit side. It's expenses associated with the factory. Number 6, salaries and wages paid amounted to 180,000. 90,000 of this was for direct labor. Okay, so let's just go and look. Direct labor cost, there it is, right? You remember where would the where would the salary had been processed to in the first place? It would have gone to salaries and wages, the full 180,000. And from there, it would have been split to, here it is, direct labor cost, right, is getting your debit entry from salaries and wages, okay, 90,000. And while we are here, we would then close off direct labor cost and send the 90,900. Was it 90,900? Oh no, let's just talk quickly. It says 90,000 Rand was for direct labor, blah, 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 blah. The employer and employees both contribute 1% each from salaries to UIF. Listen carefully. The direct labor cost includes the gross salary of 90,000 plus 1% of the contribution. That's why these figures here are 90,900, because it's 90,000 plus the 1%. Okay, please take note of that. 90,000 plus 900 Rand. Okay, it's the gross plus the contribution. So we put it on the debit side, it's come from salaries and wages, and we close it off to work in progress on the credit side there. So if it's on the credit side here for work in progress, in the actual work in progress account, you're going to have, there it is, 90,900 appear on the debit side, and it's come from direct labor cost. Why won't that go smaller? Okay, it's come from direct labor cost. Okay, happy. I don't know why that won't change. Let's see there. Okay, happy. Also, it says 90,000 Rand was for direct labor, 40,000 Rand was for administration. Will it only be 40,000? No, we're going to have to add the contribution 1% as well. So in administration cost, which is over here, look, salaries and wages ends up being 40,400. We've added the 1% contribution as well. Okay, same when it comes to the other salaries and wages now. It says also the balance was for indirect labor. So if we've dealt with 90 and 40, that's 150. There's still 50,000 for indirect labor, which goes where? Indirect labor is for the people working in the factory, but they're not actually making the motor vehicle engine parts. Okay, they're just cleaning up afterwards. So 50,000, but once again, you're going to have to add 1%. So that's why the figure is 50,500. Okay, very important. Always add the percentage contribution as well. Okay, so that deals with number 6 done. Number 7, depreciation must be written off at 12% per annum on diminishing balance method. The office uses 20% of the equipment. The rest is used in the factory. Okay, so now how much was equipment? Equipment was 500,000. So we'd first have to say 500,000 minus 120,000, right? And you're going to get 380,000. Now, if you times that by the percentage of 0, or of 12% rather, you're going to get 45,600. That is the total depreciation. However, look here, here's the calculation. However, you now have to split that up. 80% goes to the factory and 20% goes to the office or admin. There's my calculation. 80% of my depreciation is then 36,480, and it's coming to factory overhead cost. Right? The other 20% goes to office. Another name for office is admin. So there is the other 9120 for depreciation on the debit side there. Okay. Number 8, rent amounting to 250,000 was paid during the year. The factory uses 60% of the floor space, and the balance is distributed equally between sales and office. So obviously 60% times 250,000, there's my calculation, gives me 150,000 rent expense in the factory overhead cost. So I've dealt with 60%. It means 20% goes to selling and distribution and 20% goes to administration. Okay, easy, this splitting part. So there's 50,000 for selling and distribution, and there at the bottom of the screen is 50,000 for rent expense. Great. Number 9, other expenses were electricity, 160, sundry expenses, 30, and these expenses must be allocated to the factory, sales, and office in the ratio 3:2:1. Okay, so also doable transactions here. There's electricity, it's 3 out of 6. And sundry expenses, it's 3 out of 6 going to the factory overhead, chilled. And then selling and distribution, it is, what was the ratio? It is 2 out of 6 for both of those guys. And the admin was 1 out of 6 for both of those guys. Okay, so splitting in the ratio is very doable, loads of easy peasy marks. Number 10, sales amounted to 1.8 million. Okay, let's think carefully here. Sales is going to relate to finished goods stock, which is coming into view here. It doesn't record sales itself here, but on the credit side of finished goods stock is cost of sales. And I've got general journal there, but it could also be debtors journal or possibly cash receipts journal. Okay, but general journal, I guess, is the safe bet because it talks about moving things around. Okay, so where do I get this 1.2 from? 1.2 is simply going to be the 1.8 million times, what was my markup? 50%. So 100 over 150. That's going to now give you the cost of sales of 1.2 million. Okay, so I've now dealt with that. It shows that I've sold cost price of 1.2 million finished goods. Number 11, commission on sales amounting to 5% of sales was paid during the year. Okay, so when you pay people for selling your product, it's going to be a sales expense, okay, called commission. That means I go back down to my selling and distribution account. There it is, commission expense. Now, how did we get this figure of 90,000? It's 5% of the sales figure. What was sales? Sales was 1.8 million. So I've just said 5% of 1.8 million, and I've got 90,000 Rand. The next adjustment, number 12, bad debts amounting to 2,000 Rand was written off during the year. Bad debts is also an expense associated with selling. So my debit side here, bad debts, general journal, 2,000. Okay, debit side is complete with selling and distribution. Lastly, we're talking about now our closing balances at the end of the year. So raw material stock is 32,000. I can go back to my stock account at the top. If I've ended my year with a balance of 32,000, I can carry down it there and bring it down on the debit side. What does that mean? Our debit side totals 695. I can put it on the credit side. And that means how much is my balancing figure? 651 is my balancing figure on the credit side, and it talks about how much raw materials I have issued, right? I've sent on its way to eventually get to the factory. There we go. So raw material stock is done. If that 651 eventually lands up in the factory, it's going to be on the debit side of work in progress, our factory account, where we monitor everything that's in the factory. 651 there, general journal, and where has it come from? It hasn't come from raw material stock. It's come from raw material cost. Okay, so let me just go make this a bit smaller there. There's raw material cost. That's where the 651 has come from. Okay, the next balance, work in progress stock, has got a question mark for the end of the year balance. So we're not sure of this balance carried down and brought down. So just ignore that balancing figure for now. Okay, so we obviously have to work out the finished goods figure there first in order to work out the balance. So let's go to finished goods. Finished goods tells us that we had a balance at the end of the year of 40,000. Remember, we've already worked out this cost of sales of 1.2. So 1.2 and 40 gives me 1240. I can go put that on the debit side as well. And that makes our balancing figure on the debit side, right, which is going to come from the work in progress, 1205,000. Okay, so if that's over here, 1205,000 from work in progress, I can go back to work in progress and put the 1205 there. And where are we sending it to? Finished goods. Okay, so that's how we will then work out how much our end of year balance is for work in progress. But just before we get there, if we go look at the factory overheads, which is over there, we're done with the debit side, so I can total the credit, and where are we going to send this amount to? We're going to send it entirely to work in progress. So if it's on the credit side here, it's going to be on the debit side of work in progress. There's work in progress there, 357,980. So I can total my debit side, I can put it on the credit side, and there's my balancing figure. We must have a balance at the end of the year of 14,880. Put it there as well, 14,880. Okay, so we're done with work in progress. We are pretty much done with finished goods. I can put my balancing figure there, brought down 40,000. I forgot about this ledger account, raw material cost. Remember, the raw material cost account started with a debit amount of 651. And where did it come from? Raw material issued. And where did it get sent to on the credit side? Work in progress. So it's a very in-out ledger account, nothing else to it. Simple one-liner, not very popular. Okay. Factory overheads we've dealt with. Selling and distribution, we just need to close it off now. So if the debit side is totally finished, we are going to close off this 205,333 to where? Because it's like a general expense, we are going to close it off to profit and loss. Okay, so profit and loss gets closed off there, as well as administration also gets closed off to profit and loss. It's like our normal expenses in our operating expenses of the income statement. Okay, so there's the activity 9.8. Hope you followed everything. There weren't too many difficult adjustments. Bearing in mind that whenever there's a question mark, you might have to go find another figure from another account, bring it in, and then you'd be able to work out our missing figure. Okay, so that's not 9.8. On to 9.9.